Hi guys, and welcome to another day with Serene Education. 10th of October. I'm going to go over the four majors this morning, starting with the euro against US dollar. Let's have a look. Okay, so the daily, what did we have yesterday? Well, a very bearish engulfing day yesterday after this failure that we saw on Friday. And what it's done now is we've seen price heading towards the institution moving average. Let me just take away this trend line. You can see the institution moving average here at just above the 12,800 mark, which is this dark horizontal line here. A lot of hesitation beforehand, before we saw the break above and trade above it. We saw support through here over a 4-day period just recently at the latter part of September. And then prices failed to really move higher than that. We had this evening star formation here with upside movement followed by bearish, and then we've seen price reverting to the downside. So price, as you can see over the Asian session, has been trading lower into the support area here at the 1282 300 mark before we've seen it bouncing. So on our intraday time frames, you want to see that. So that green line over here constitutes to the institutional moving average on our daily, and it constitutes to the institutional moving average where it's trading right now on our 4-hour. You can see the CTC is very much negative and the RSI is below the 50% line. So what we want to see now is price breaking through this if it's still to remain negative. Otherwise, we could see consolidation with a potential for upside now as we head into this price support area. You can see the candles, the 4-hour candle, the last prior 4-hour candle, very indecisive. And you can see the 4-hour candle that is in play as we speak now, which will close at 10 a.m. GMT this morning, is also very indecisive. A lot of wick, not a lot of motion after that initial move to the downside. So what we want is either to see price continue to the downside, we need to see a bearish engulfing candle, a break below that 128200 mark, which would definitely confirm that sentiment still is favoriting the downside in this particular pair. Or the other opportunity would be to see a bullish engulfing candle here at the current support to see price pulling back towards that 12900 intraday. Onto sterling, let's have a look and see what's been happening in this particular pair. A lot of momentum to the downside after heading into that major resistance level at 16300. I'll just take you to the weekly just to show you that, guys. Now you can see through April, May, a lot of resistance, and we had this evening star formation here at a resistance level, which happened to be the prior one, and you can see the momentum has really started to fall for sterling against the US dollar. And you can see quite clearly on the daily what it's been doing. Breakthrough the 23.6 February tracement area here, took the low here in June to the high in just recently at the 16300, and you can see that the major support and resistance levels here in terms of the February tracement 23.6 happened to be support just recently. However, that failed to actually really help stem this negativity. We had a bearish engulfing candle, and prices looked lower since. So prices moving towards that all important 38.2, which is here just shy of the 15900 mark, and that will bring us back towards the 50-period moving average. So as it stems now, we should be looking for negative sentiment to continue to the downside. Notice on our daily, we only have 2 parts to our 4-part strategy, i.e. we have a red arrow, red candle. However, the histogram is telling us that the sentiment is still looking positive near term. So just be aware of that. 4-hour, you can see we're now trading below the institution moving average, and we're heading towards the 1595 mark at the moment. Now you can see the RSI is starting to plateau, it's starting to almost flatten out now at the bottom end. So taking a bit of a breather after that breakout that we saw just recently. As long as it remains below the institution moving average, and you can see it's trading below all the other moving average, intraday we should still be looking for that sentiment to favor the downside. So be aware, we are trading into a potential support and resistance level now, and our next port of call would be the 5900 as we move lower. Next up is sterling. Let's have a look and see. Oh, sorry. Next up is US dollar Swiss franc. Apologies, guys. Let's have a look and see what's been happening on the daily. Clearly, support has been forged now at the 9300 mark. We had price support and resistance in this area, and for the second time now, we've seen price actually reattempting the institution moving average at the underside. This is the first time it's actually trading underneath the institution moving average since the same time last year. So this is quite a negative sentiment reading. However, if price is going to be near term looking strong, you can see this is the second attempt back up towards it. Ideally, we want to see it give away straight away, and we want to see price reverting to the downside. you can see that if price, yesterday in particular, a bullish engulfing candle to the upside, if price can actually find support above the current Fib retracement area here at 940, and most importantly above the institution moving average here, then we should see price reverting back to the upside towards that 50 period moving average on our daily. Looking at the 4-hour chart, you can quite clearly see that price has been trading below the institution moving average since August of this year. And near term, you could see in our price after one attempt, and you can see a reattempt just recently, you could see that the RSI has started to get slightly, you're starting to see a bit of the RSI showing positiveness as prices moved higher, and the RSI has moved with it. So it's telling you it's definitely seeing, and you can see the prior attempt here, low, this RSI not getting as low, but close enough. You can see the RSI signal is well above where it should be, and confirming that's positive upside movement. So near term, you can see the institution moving average in play on the 4-hour time frame. If we get above this, as I mentioned, a nice bullish engulfing candle, then we should be targeting that all important prior area here, our price support and resistance at the 952 mark, which is not a bad way away in terms of pip movements. So intraday, we have a clear direction. We have a lot of targets here to the upside if and when price gives us that actual buying sentiment candle. Last pair of the day is US dollar Japanese yen. Let's have a look at this particular pair. Still forging a support at 78 near term. You can see a lot of support and resistance through this area recently. From, we're talking about, what's this, June, we had a first attempt, and then through most of July, August, September, a breakout. There was one or two breakouts below that faked out to the underside, but we saw the Fed printing starting, and near term, same thing happening over here. You can see quite clearly just recently, however, you can see we had a bearish engulfing candle, and we had an indecision candle yesterday. So this bearish engulfing candle, almost saying that the resistance level near term is still there, and you can see the highs are getting a lot lower and are being squeezed between the 78 and these highs are getting low. So the institution moving average still above price, and most important, you can see the histogram is still very much negative across the board. One or two areas of blue, but overall the sentiment still looking negative, and sentiment very heavily favoring further downside. We would need to see 78 being broken, breached, and we would need to see price moving well away from it to actually give us a definite confirmation. We don't want to see the same repeat of what happened just recently, where price actually broke through that area, however pulled up quite strongly against it. This is the Fed printing. So what we want to see is a genuine, in this case, it's just trade what the charts actually are telling us. So rather we'll look for either or. At the moment now, negativity is still in favor of downside towards the 78 because of this bearish engulfing candle just recently. As it engulfed all this upside here. However, as we head in towards the strong support here at 78, we should be aware that we could see a potential bounce occurring. So we could see price stalling. However, near term 78 would be our first target. We would need to see a bullish or bearish engulfing candle because we see the indecision candle. Ideally, if we see a break below 78, then it looks like long term we should see further negativity to the downside. Near term we see price selling into here and finding support at 78. Then we should be looking ultimately for the next couple of days to see price finding a bit of support. So be aware of this one. Very iffy. So if you are looking to trade this one, I'd rather wait for definite confirmation, bounce, support, or breakout bearish to the downside. Other than that, guys, that's pretty much it. There's not much else on the news front, to be honest with you. Just looking at what we have today, we have the French industrial production month-on-month figures. We have the Italian industrial production month-on-month figures this morning. We also have this afternoon the 10-year bond auction for the US market. We have the beige book later on at 7 p.m. this evening. So that's one to watch out for. Other than that, pretty quiet. I suspect that they'll still be looking at Spain and Greece out there, trying to get those two countries sorted out. However, just look at what your charts are telling you. Look at price action. They'll tell you whatever you need to know on the charts. Just go by that. Don't go by. Just be aware of any fundamental news. I'm not saying you mustn't get rid of it altogether, but just be aware of charts. Just go with price action. Look at candlestick setups around major support and resistance levels. They will give you all the information that you require. Other than that, back it up with sound money management, and you'll be fine. Okay, as long as you follow the rules. Got to follow rules, guys, in trading. Very, very important. Without them, you'll come unstuck. Okay, and I'll see you first thing tomorrow morning. Until then, trade serenely.